Welcome to SIGMA Actuarial Consulting Group and Risk 66 training program on how to become an analytically based and data-driven broker. Now, information has been around for hundreds of years, but it's only in the past couple of decades that the analytical tools and the computing power has emerged to let us use information more effectively to make better decisions. Now, we believe your role as a broker in order to compete in the years ahead must be to take data, analyze it, and help your clients make well-informed, analytically based, and data-driven decisions. And that's what this training program is about. We're going to show you how to obtain the data that you need, how to analyze it, and how that supports decision-making processes. So let's get started in session 1. Math and analytics have been with us for thousands of years. So first I want to look at why is it that over the past several years the use of analytics has become so crucial and so important for the brokers in the insurance industry. So what has occurred over the past few years is shown in this information graphic here. The volume of data that's available to businesses has grown at a tremendous rate, and we're able to capture that data inexpensively. The velocity of the data, which refers to how quickly we can capture that data and move it into a decision-making process or analysis, has increased dramatically. The variety, the different types of data. Businesses are able to obtain data from a variety of sources where previously they couldn't do that because of the cost or perhaps some type of technical hurdle. There's also this huge amount of movement in the data and this veracity to the data that causes some doubt and uncertainty about, is it accurate, can I rely on it? So when you put all this together, it creates this perfect storm where those businesses that can build off of this data, they can analyze it, capture it, deal with the complexities and the uncertainties of it, can create a very powerful competitive advantage for their business. And one piece of this is the type of work that you as a broker do in analyzing risk and making loss financing decisions. And during the past several years, we've seen several significant success stories. If you just Google analytics and competitive advantage, you'll find some great stories. But big data and analyzing that data and having analytically based decision making in your organization is critical for business success these days. Insurance companies that you work with as a broker are using analytics, and you've seen the impact that that has had on your business in the way they underwrite the business, the way they view your accounts, and you may have even sensed that the role of the broker in assessing the risk of the account, where in the past maybe you had conversations with the underwriter about what was going on with that client, they may seem less interested now because they have these very sophisticated analytical models that they use to price and to really view the risk, where in the past it was done more through subjective analysis in discussions perhaps with you. The CFOs are just being bombarded with use analytics to make your decisions or your organization is going to fail. Whether you read CFO magazine or you go to some of the conferences, I spent some time working in an academic environment where analytics was really being presented as the number one differentiator in the decade ahead for businesses who want to survive and thrive. So it's a big issue, and what we're going to do here in this training program is help you define your role in terms of analytics and supporting your clients. But the other side of the coin from all the success that data analytics can provide is that unfortunately most organizations don't do this well. 65% of customer analytic models that companies actually pay, usually significantly for, never get implemented. 78% of firms fail to detect data breaches using analytics. They should be able to do that. 80% of online retailers use Google Analytics incorrectly. So many firms are failing due to a lack of what I call analytical prowess, which is that ability within the organization to use analytics in a decision-making process, also in a creative process. The concept of analytical prowess applies to both your organization and your clients' organizations. Now, the key here is to understand the top echelon of each firm, whether it's your firm or the clients that you serve, have a strong impact on the capabilities, the future, the potential success of that organization. And analytical prowess really starts at the top. That either means the top executives are open to the use of analytics and have some type of vision for how they're going to be used to help the organization perform better, or they hire the right people and give them enough authority so that they can find ways to integrate analytics into the organization. But this concept of analytical prowess is one you may want to keep in mind when thinking about your own organization and how you're building those resources internally. And when you go to meet with the CFO of a major client, understand that you need to sense where those capabilities are within that organization and how you might plug in and support their efforts to increase their analytical prowess in order to make better and more effective decisions. There's one difference I want to point out here between big data and what I call small data. The big data sets, which are typically defined as those that are too large or complex, change very quickly, to be evaluated by conventional methods. So you can imagine your typical Excel spreadsheet, Access database, or even some bigger mainframe kind of computer models can't handle some of this data because there's just too much of it. There are limits with some of those software tools. Small data sets are more the types of data that you're accustomed to working with and that we work here at SIGMA with, loss runs, claims data. There's much value that can be extracted from that data. So the big data sets are where the insurance companies are using big data analytics, decision tree analysis, predictive modeling to come up with a better way to price risk, to manage claims, and to understand their customers. Now that affects your business definitely, but it's not where you need to be focusing. You need to be focusing on how to support the CFOs who are your clients. You need to understand what the insurance companies are doing in their big data analysis and how strategically that affects your business. But it's the small data sets that we work with and that you work with where there is a huge opportunity to better understand how to extract value from that data. So small data sets are data sets that have been available for some time, as I said, loss runs, claims databases, and can be managed and analyzed with available tools and external resources like SIGMA. And what you use this for is one, pricing risk and improving loss financing decisions. That's a critical piece that should appeal to the CFO, that you're bringing in an analytically based process for choosing the right loss retention and how to finance that. Managing claims, perhaps doing some early prediction of claim severity in a workers' comp case, estimating liabilities for balance sheet reserve estimates. So I just want you to keep in mind the difference between what the insurance companies are doing with big data and what the brokers should be doing with the smaller data sets that have a lot of potential to help you improve decision making among your clients. So as we discussed on the previous slide, it is more about small data for you, the insurance broker, than it is about the big data sets that the insurance companies are working with. So we see your role as asking the right questions, and these are questions that are going to lead to a decision process built on analytics. Find the best answer through experience, and we think your experience and your product knowledge should be critical in this process. That's something that we don't want to lose as the world moves towards analytics. Analytics given the time and resource constraint. Now analytics can be a very in-depth process which can take a lot of time, or it can be shorter analytical decision trees and processes that can support a good decision. But it's important to combine both this subjective, this experience-based knowledge that you have with your clients and your years of working as a broker, along with these analytical techniques that we're going to work through in this training session. Then you want to be able to effectively translate the analysis into a specific call to action, a recommendation, or decision. So you want to be able to connect the analytics to the decision and understand how that is happening. And then you want to be able to communicate with visual metaphors, picture graphics, and non-technical language, the analytics to the CFO. And you're going to have to judge that based on the CFO you're working with. Some of the CFOs that we work with are very analytical. They're very familiar with some of the concepts that actuaries use, and you should speak to them in that way and be familiar with that vocabulary. Now, others are going to want something that is more top level, and you want to be sure to present the results of the analysis, and we can assist you with that in a more top level manner. One thing I want to stress is that in order to be an analytically based, data-driven broker, you do not have to be a mathematician. What you need to do is just understand where the analytics come into play, how they support the questions that you're going to use as leading questions, and be the bridge connecting your client to SIGMA and just understand the topics that are discussed, build your vocabulary, understand what the analytics are doing and how they're utilized. But you don't have to do the math. You don't have to be a mathematician. We're going to teach you what you need to know in order to be comfortable in these conversations with the CFOs when discussing analytics and analytically based decision making. So first, I want us to take a moment and think about what your clients are thinking, what they're hearing and reading within their industries, and why analytics matter in their minds, so that when you walk into those conversations with the CFOs or controllers or the organizations, you kind of know the pressure that is on them and what their environment looks like. First, if we look at some of the journals that CFOs might be reading, example, CFO Magazine, there's a recent article on how to be a data-driven CFO, and here I'm just going to read the quote. After setting an organization's strategic objectives, it is crucial that CFOs and finance leaders engage with the rest of the organization to ensure data analytics become ingrained in routine decision-making. Now that's going to include the loss financing decisions, the insurance-related decisions. So they're going to be putting pressure on the risk manager, if they have one, or controller, whoever is kind of overseeing that function, to show some proof that data analytics are involved in the decision-making process. Also, what is stressed in this journal, and I've seen it in other places, is that if you will become the analytical CFO, if you can show that you have this ability to bring analytics into the decision-making processes of the organization, then you're going to elevate the role that you play within the C-suite, within the top level of the organization. So there's a lot of pressure here for analytics, and I think this is a good example of what you will be seeing when you go in and have conversations with CFOs. Another good example is a few years ago, the Harvard Business Review did a big issue on data analytics and big data. And one of the quotes from one of the articles in that particular journal talked about the companies that want to prosper in the new data economy must once again fundamentally rethink how the analysis of data can create value for themselves and their customers. So again, stressing from a lot of different angles here, the academic angle, from the industry journals, analytics is critical to the future success of the organization. Now, from the academic world, a very rigorous academic study was done looking at companies that are being successful with analytics within the organization and highlighting the gap between those who have implemented successful data-driven practices and those that are struggling with that transition. And the gap is getting larger and larger. And over time, the organizations that can't implement successful data-based programs to make better decisions will fail, and those that are capable of doing that will succeed in gaining market share and success and size. There are three key areas that a successful analytical organization typically masters. One is information management. The second is having the analytical skills and tools within the business, and then a data-oriented culture. So those are interesting findings, and now we're going to look at and see, does that ring true for our industry that you serve and that we serve here at SIGMA? So again, the three competencies that we want to look for if you're going to be an analytically based, data-driven organization, whether it's your organization or the clients that you serve, is information management, analytical skills and tools, and a data-oriented culture. So let's look and see, do these apply to your organization, and do they apply to brokerage firms in general? So in order to answer these questions about our industry, I did a qualitative research study talking to some of our industry's leading consultants who work with hundreds of brokerage firms, and through an interview process, discovered some interesting insights. First, the competitive advantage from analytics, one of the quotes I got was, "We are working on another entirely different kind of project using pure analytics down to analytical negotiations, and they will increase their profit margin in the first year alone, probably to the tune of over $100,000 without any extra work." Now, this was a small brokerage firm. They were working with a consultant to bring analytics into the way they do business and saw some significant benefit from that. Some agencies and brokers have such amazing individual salespeople that it doesn't seem to really matter. And what this was referring to was having analytical skills among the salespeople. Now, the analytics just don't matter. They're just so good at what they do, there's a lot of room to be sloppy. Now, this is a perception I think is very interesting, because I think a lot of us in the industry have this perception that these super salespeople can overcome a lack of analytical skills and still close the deal. I think that opportunity, which maybe in the past that was true, is fading quickly, and you're no longer going to be able to just survive as a top salesperson strictly on your sales ability unless you can back it up with the analytical skills. Now, when I discussed culture with the various consultants, several things came up. First, the culture for analytics. A lot of the brokerage firms came out of this wild, wild west mentality where they had an idea, they're very entrepreneurial, and they went with their gut and made things happen. Now, this was what I consider an older model for a way a small brokerage firm might get started, an agency might get started, and may grow to a good size, with a entrepreneurial leader leading that firm. And whether or not there was a culture for analytics, depending on that one leader, and they may or may not have gone that route in building the agency. There is a fear of analytics. I picked up on this from everyone I spoke to. Yes, they're scared. The leaders are scared. The analytics are intimidating to a lot of agencies and brokerage firms, because the insurance companies are basically saying, we're building these sophisticated analytical models. We no longer need the level of input that we've received from you in the past about your accounts. Technology, the quote here was, so the agency's limited ability to manage and access the data in their system because of the complexity of some of the systems that you guys work with, which minimize their ability to learn how to use the system to the maximum effect. It means that the agent can't use analytics to the fullest extent that many other industries could. So we have a technology challenge there. Some firms are able to master that. Some are struggling with it. There's a fear of analytics. And the culture is still driven in a lot of agencies by the top person. And these are important points to be aware of. Now, when I discussed analytical prowess with the consultant, several things emerged. The firm's analytical abilities, insurance agencies and brokers that I've worked with, they're different, but they're mostly at a very low end of the scale, meaning not many capabilities. So several of the consultants I talked to did not observe a very high level of analytical skills within the brokerage firms. I think this is an opportunity for you to be one of the few firms that really can bring analytics to play in the way that you serve your clients. Leader analytical skills, the person in charge wasn't real comfortable at the time using analytics, but more importantly, the person that he had making a lot of the day-to-day decisions couldn't stand analytics and gave it some lip service, but nothing below that. So if the top leaders don't have a commitment to analytics, they don't help build the culture of analytics, and they don't bring analytics into the decision-making process of the brokerage firm itself and the clients that you serve, it's never going to happen. Salesperson analytical skills, this is likely to be a big transition. I don't know when it's going to happen. I hope to be around to see it, but in that the people that are in charge of making it rain in the insurance business, the producers, the salespeople, they're not typically analytically inclined. Now, I see maybe a different mix of brokers in the work that we do here at SIGMA. I do work with a lot of analytically based or very analytically talented brokers, but I think the point here was in the agencies that this consultant worked with, did not see a lot of strong analytical skills among the producers, and that's why I think there is a strong need for a training program to help producers get up to speed on using analytics in the process of helping their clients make better decisions. Change is difficult in any industry, but within our industry, with analytics changing the way that the business is conducted, it presents a big challenge. Here's some quotes from my discussions with the consultants who work with so many brokerage firms. So they don't know what's in the black box. Here's the big challenge, Tim, the big change. The data analytics suggests that it's important for employers to improve, to get better, to go from where they are today to put processes in place and to get better. And the future role of the agent that I see around data analytics is who can help an employer do the best. Now, the black box is really the black box that the insurance companies use in rating the clients, the black box of analytics itself. It's just that stand-in word picture for analytics in general and how it's affecting the industry, the way insurance companies operate, and the clients that these brokerage firms are working with. The motivation for change, and I think sometimes what happens is an outside person comes in and says, maybe we shouldn't just do it the way we've always done it. Maybe we should look at some data to see if that makes sense. And maybe we should go and look and see, because oftentimes things can be counterintuitive. So change is occurring in some agencies because someone is carrying that banner of, hey, let's do things a little differently than we've done in the past. These processes, the ways that we've typically served our clients may not work going forward, and let's bring some analytics into the picture. So someone needs to step up and start introducing some analytical approaches to the way business is conducted, the way that the client's decisions are supported. So let me just summarize now kind of what I've found and how it ties back to that research study that I started off looking at before we got into the research that I had done with the various consultants in our industry that work with brokerage firms. Remember, we had these three different capabilities that we're looking for: information management, analytical skills and tools, and data-oriented culture. And what we find is that information management, the technology connection was mentioned several times. The analytical prowess, when we were discussing firms' analytical abilities, the leader of analytical skills, salesperson's analytical skills. The data culture was brought up when we talked about the culture for analytics, the fear of analytics. So we found these three capabilities: information management, analytical skills and tools, and data-oriented culture, all showed up in my discussions with the consultants as being key issues within our industry. So I think it's something that we should be aware of, something we should focus on, is making sure that the brokerage firms, that your organizations have the right information, can collect the data that you need to make the analytically based decisions, that you are building the analytical skills and have the tools necessary within your firm, and that you're building this data-oriented culture. So stop and think for a moment. Do you agree with this assessment? The brokerage industry is not unique, and firms that don't master these three competencies will struggle, if not fail, in the future. And do these apply to your organization and brokerage firms in general? So think and self-assess on your brokerage firm. Do you have the right information management, the ability to gather the data that you need? Can you perform the analytics, whether it's internally or through a partnership with someone like SIGMA? And are you building a data-based culture where analytics come to the forefront of the conversations when you're discussing problems that clients are facing, or even clients that your own brokerage firm is facing? So what we will teach you in this training course is how to be an analytically based, data-driven broker. And now we're going to start looking at analytics and the course that is to follow this introduction. So our goal for this training program is that after you complete it, you'll be able to do the following: ask insightful questions that can be addressed with data and analytics, understand the metrics and analyses that are needed to answer the questions, find the source of those metrics and analyses, and we propose that SIGMA and Risk 66, our online community of analytics and education, is part of that, and improve your analytical IQ, and that's the ability to understand and communicate the answer to the questions that you raise using data and analytics.